Hey guys, Chart Stoppers back with another video. In this channel, we take a look at different stocks and map out their key support and resistance areas on their chart. It's important to know these areas before buying any stock, and it's also important to know what kind of a trend a stock is in before you buy into it. Support and resistance is one of the most important things you should know about a stock before you either buy or sell. Also, if you're doing any day trading, swing trading, or options, you're definitely going to want to get familiar with support and resistance. Just to let you guys know, I am not a financial expert. These videos are for educational purposes only, but I am here to point out key factors on the charts which do impact the price action of a stock. Also, I provided a link in the description for Webull. You could use it to start an account and get 2 free stocks. I also provided a link for Robinhood. You could use it to start an account and get 1 free stock. Just to let you guys know, we will be doing 3 videos per week on 3 different stocks. If you have a recommendation, leave a comment below and I'll try to get to your video. And also don't forget to subscribe to the channel and hit the notification button so you don't miss any videos. Okay, so with nothing more about that, let's get into the stock we're going to take a look at today. I wanted to talk about what's been going on in the market. There's been a lot of volatility in the market lately, a lot of ups and downs this past week. Everything's been crazy. You saw a lot of selling on Thursday. It continued on Friday morning. And just when you thought it couldn't get any worse, in the middle of the day on Friday, everything started to move up. And we ended the day on Friday in the green. And all three, the Dow, the S&P 500, and the NASDAQ turned out to be positive for the day. At one point, the NASDAQ, I think, was negative 2%, and it ended the day positive. So that was a good thing on Friday, a good way to end the week going into next week, and we'll see if it can continue next week. But we have to watch these bond yields and see what the 10-year does next week to see if this positive momentum can continue. So let's take a look at what we're looking at today. I'm taking a look at Zoom again. I wanted to go over this again during this correction because everything's been falling and a lot of support and resistance has been getting killed that we went over in past videos. So I just wanted to quickly go over what's been going on. Zoom is currently trading at $337.43. It was down about a little over 1.5% on Friday. That was $5.66, and after hours it continued to fall another 0.5%, which was 18 cents. So I already have our chart mapped out from the last video we did. If you didn't see the video, I will provide a link to it in the top right hand corner. You should be seeing that right about now. If you want to look at that and you could see how I got to these support and resistance areas, you can watch that video. And we're just going to go over how we got here to this point right now. So we'll see where we're going and what we should do about it next week. Okay, so we obviously started off at the top here. This was the high of the chart at 588.84. And, you know, you saw this thing fall. This was in October of 2020. So it's been falling ever since. You know, it hasn't been on an uptrend. It's been coming down ever since October, ever since it hit that high. And it's just continued to fall. You had a good earnings report, or actually you had a bad earnings report here. You saw a gap down on the chart. And it really hasn't recovered since. You know, it's just been moving down, down, down. And then their next earnings report, which was on the 1st, right here, was not positive either. It actually was positive, but because of the correction, you have, you know, a lot of people selling it off because of what's happening with all the tech stocks. People don't want to hold these stocks during this correction because of this bond yield. You know, this is, it's all about the reopening plays right now. That's what people are switching over to. People are switching out of their COVID-19 plays, and this was one of the biggest COVID-19 plays that you could probably think of. This was a huge one. Everybody was using Zoom during COVID, so everybody was also investing in Zoom because this was a big thing during COVID. Kids couldn't go to school, so they were using Zoom. People couldn't go to work, so they were using Zoom. So, this was one of the biggest stocks of the year last year. But now we're in 2021. Everybody's getting vaccinated. And we see that the country's about to reopen come summertime probably, and everybody's dumping this stock. Even though they had good earnings right here, people are still selling, and we've seen this thing drop now almost $250 since October of last year. So we're looking at a big drop here. It continues to drop. We saw it break through our 450 support right here, and that was in December. And now we're looking at our 350 support, and it has been broken a couple days ago. And now we're looking at our $350 support too, and it has been broken also. So the next stop for this stock would be $280 on our chart. Let me move this line down. It says 281, but that's really supposed to be 280 right here. Let me try to get that down a little bit. Whoops, went a little too far. Let's see if I could get that on. Oh, I can't. Okay, I'll just leave it there at 281, but it's really supposed to be $280 anyway. So that would be the next support for this stock. If it keeps dropping, that's our next level to be watching, is $280. As you could see, it was a former resistance back in August, around mid-June to August, and it finally broke through in mid-August of last year. So we're going to be watching that area if it does keep dropping. If it doesn't keep dropping and it does go up and break through this resistance now that is 350, we're going to be trading in between the 350 and 450 range until it can break through that 450 again and possibly go back up to, new highs. But right now, it's not looking good for Zoom. It's on a downtrend. It's been on a downtrend since, like I said, October of last year, ever since it hit the all-time high. And we're going to keep watching this thing. And if it does break this 280 mark, the next stop for it would be 240. That's our next level of support after that. And obviously you could see right here, after 240, it would be 175 and then all the way down to 100. But I don't think we're going to see those levels. I don't think it's going to get that extreme. I mean, we've already lost $250 off the stock price. So I think it's going to end up somewhere in between here for now and probably get back up into this range right here. Okay, so that's my update on Zoom. I just wanted to quickly go over that right now, just so you guys weren't wondering, what's going to happen with all these support areas getting broken down by this correction. It's been a crazy couple of weeks. A lot of charts are looking like disasters right now. And, there's just nothing you could do until the market corrects itself and we get out of this correction and everything, gets back to semi-normal. And the charts will start correcting themselves also. We'll get back to normal-looking charts. Right now, everything is pretty hectic. You can't really follow much technical analysis. So I'm trying to do the best I can right now, updating some videos and some stocks to help you guys out if you're wondering, what happened to the support areas and what do I do if I'm trying to trade these stocks. So that's what I'm trying to do right now. And if you guys like the video, make sure you hit the like button and don't forget to subscribe to the channel and also hit the notification button so you don't miss any videos. Okay, so we'll see you next time on Chart Stoppers.